Right, so I'm staring at this ETH chart, yeah? It's been building this structure for days. Looks a bit like a wonky wedge. But my gut is screaming that this thing is about to absolutely fly. Time to ape in, right?
Scoffs.
A wonky wedge. Mate, you can't just start inventing TA patterns because you're bored. And your gut is probably just the dodgy takeaway you had last night. Before you ape in and donate your money to the market again, did you do the first, most basic check? What? Did you look at the volume? Volume's for the stock market dinosaurs, innit? In crypto, a single tweet from a blue tick account is your volume confirmation. Right, it's the new matter. And that's precisely why 90% of crypto traders get liquidated.
Okay.
This is the perfect topic. Let's forget your gut feelings and talk about how actual professional analysts, the ones who study for things like the CMT, decide if a chart pattern is a golden opportunity or just a beautifully designed trap for, well, people like you. Here we go, everybody. Strap in. Professor Morgan is about to give a lecture. All right, then. Enlighten us. What's this top secret CMT level 2 knowledge? How do you tell a real breakout from one that's just going to reverse and take out your stop loss for fun? It's not a secret, it's just discipline. And it starts with the one thing you're allergic to, confirming the signal. The most powerful confirmation tool is volume.
Okay.
Think of it like this. Your chart pattern, your wonky wedge, is a rumor that a party is about to kick off.
Okay, I like parties. Go on.
So you get to the club, but there's no queue, no music, no one at the door.
Yeah?
That's your breakout on low volume. It's a ghost town, a fake out waiting to happen. But if you arrive and the queue is snaking down the street, security's beefed up, and you can feel the bass thumping from inside,
Wow.
I'm emphatic. That's your breakout on a massive volume surge. It tells you the hype is real. It means institutions, the big money are piling in. The move has conviction.
Right. So high volume means the move is legit. Low volume means stay away. Simple enough.
But what's considered high?
Volume.
Yep. It's all relative, surely. Exactly. You're not just looking for one single big green volume bar.
Right.
You're looking for a statistical anomaly. So overlay a 20-period moving average on your volume indicator.
Okay.
A true institutional breakout will often happen on volume that's 1.5 times, 2 times, even 5 times that average. It's an undeniable stampede of capital.
Right.
It's not just a few retail guys clicking buy.
Okay, that's a proper actionable rule. I get that. We see it in crypto all the time. A meme coin's been doing maybe, 5 million in daily volume for a month?
Yep.
And then suddenly it does 50 million in 2 hours as it breaks its all-time high. That's the real signal.
Precisely. But even that isn't enough for the top tier. That's just the first checkpoint. The real pros, the CMT charted guys, they demand confluence. Confluence. It's a fancy word for getting a second, third, and even a fourth opinion before risking a single penny.
So who are you asking for a second opinion? Your tarot card reader?
Try. No, you're asking your other indicators. So let's imagine a perfect inverse head and shoulders pattern on a stock chart.
Okay.
The price breaks the neckline. You look down, massive volume spike, check. But before you get trigger happy, you glance at your RSI.
Right.
Is it also breaking its own downtrend line? Is it moving up strongly from below 50? So the momentum needs to back up the price action. Yes, it's not enough for the price to move. The force behind the price has to be there too. You've got it. And what about the MACD? Is it having a bullish crossover at the same time? Is the histogram accelerating? It's like being a detective at a crime scene. The chart pattern is the smoking gun. The volume is the eyewitness who saw the suspect.
Okay.
It's the RSI and the MACD that are the forensics team confirming the fingerprints. You need all of them to point to the same conclusion.
I like that. You're basically building an airtight case before you go to trial.
Yep.
But the trial is risking your hard-earned cash. It's definitely a more robust process than my usual method of, it looks good, let's send it.
Sending it as a philanthropy, not a strategy. And there's still one more layer. Ooh, the boss level of validation. Multi-time frame analysis.
The old don't fight the Fed on a chart, don't fight the major trend.
It's a bit more nuanced than that. Let's say you found the holy grail on the 1 hour chart. You have the pattern, the monster volume, all your indicators are singing in harmony.
Yeah, perfect.
It's perfect, but then you zoom out to the daily chart.
Oh.
You see the prices running headfirst into the 200-day moving average, a level that has crushed rallies for the past 6 months.
Groans, you're about to get absolutely steamrolled. It's like trying to paddle a canoe against a tidal wave.
Exactly.
Because you caught a little gust of wind.
The macro always wins. Always. So, the professional analyst validates the micro setup
Right.
by ensuring it aligns with the macro environment. A true A+ setup is a bullish 1-hour pattern
Okay.
that's breaking out after the daily chart has already established an uptrend and has clear skies ahead.
Okay, let me try and sound like I was paying attention. The professional's validation checklist. 1. Identify a clear textbook pattern, not one of my wonky creations. 2. Demand a breakout confirmed by an undeniable above average volume search. 3. Require confluence from momentum indicators like RSI and MACD. And 4. Verify that the trade is moving with the prevailing trend on the higher timeframes. Only when all 4 lights are green do you even consider deploying capital. He's got it, see? There's a proper trader buried under that degen exterior somewhere. That framework is what separates consistent profitability from a gambling addiction. Yeah, it's patience, it's a process, it's discipline. But let me throw in a spanner, Professor. The academics, right? The guys in their ivory towers, they preach the efficient market hypothesis. They say price moves are random and that chart patterns are no better than seeing shapes in the clouds. What's your comeback to that?
My comeback is that they've never had to pay their rent from a P&L statement. Look, the reason patterns work isn't because of some magic formula.
Okay.
It's pure, unfiltered human psychology played out on a chart. A head and shoulders pattern is the visual story of a battle between hope buyers and fear sellers.
Right.
The neckline is the last line of defense for the buyers, and it becomes a self-fulfilling prophecy. When enough traders see that neckline, they all place their sell orders just below it.
Yep.
Their collective action is what creates the breakdown that the pattern was predicting. Exactly. It works because we, the market participants, believe it works. The validation signals we just talked about, the volume, the indicators, are just our tools for measuring whether a critical mass of people are looking at the same picture.
Got it.
And are about to act in the same way.
So it's not about predicting the future.
Thoughts of Fanny?
It's about reading the room.
That's the most street-smart definition of technical analysis you'll ever hear. So next time you see a wonky wedge, maybe run it through that 4-step checklist before you remortgage your house for it.
All right. You've made your point. Your way is probably smarter, but definitely less of an adrenaline rush.
Keeping your money is the best adrenaline rush of all. Now, for everyone listening, if you want to argue with us about this, show us your own chart patterns, wonky or textbook, and get our take on them, do it. You should get in our private chat group. For sure, the link's right there in the description below. Hop in, have a laugh with us, post your charts. We don't buy. Hard. Now, here's a question we'd like you to think about. If classic chart patterns only work because generations of traders have been taught to believe in them, what happens when a new generation, one raised entirely on crypto, memes, and AI, starts trading? Will they believe in new patterns and will the very shape of our charts begin to change?